This brings my total passive income for January 2025 to just over £4,000. Hello and welcome back to another episode of My Journey to FIRE, which stands for Financial Independence and Retire Early. One of my long-term goals is to fund a good lifestyle without the need for a 9-to-5 job. So in this video series, I give an update every month on how I'm investing my money to generate streams of passive income from the likes of stocks and shares, rental income and savings interest. This video series is basically an investing experiment. I learn about different investing strategies, try them out, try different things, and then I document them here in these videos. And as this is a completely unfiltered monthly review, I'll share what's been working for me as well as where I've lost money. So without further ado, we're going to start by taking a look at the changes I've made in my stocks and shares ISA portfolio. In last month's video, I reviewed the best and worst performers in my stocks and shares ISA portfolio. As you can see in the graph, 8 of the top 9 performing holdings in my portfolio were all ETFs, and 5 of the 6 worst performing holdings were individual stocks. These results only reinforce my thinking that for the average day-to-day investor that I am, investing in ETFs as opposed to individual stocks would be a smarter way to go. I actually made a video back in April last year telling myself that I was going to sell off all of my individual stocks and just stick to ETFs, but for some reason I didn't heed my own advice. I think part of me probably thought I was the next Warren Buffett and I could just call these things. But as you've just seen from those results, this wasn't always the case, so at the start of January, I decided to make some major changes. I sold nearly £3,000 worth of BAE shares for a 19.14% profit. I was happy to get rid of these shares, to be honest, because BAE Systems is a defence-based company, and I've already got quite a lot of money in a defence ETF. I said goodbye to £3,000 worth of Aviva shares for a loss of 3.14%. I've owned those shares for years, and over that period of time, they've paid me hundreds of pounds in dividends, so I was happy to bin them off. I bagged an 11.03% return when I sold my Unilever shares for £1,600. I sold my Shell shares on the seashore for £3,300 at pretty much what I paid for them. Despite my Rio Tinto dropping an eye-watering 19.42% in 2024, I still managed to sell them for a 12.43% profit. And lastly, I cut my losses with Legal & General, who were down around 6%, taking home £1,400. So there were some wins and some small losses there, but overall, over the years, with the dividends that I've received from these different companies, I've made good returns on pretty much all of them. So currently I've only got 2 individual stocks in my portfolio now, one of which is BP, because analysts predict that BP was going to perform well in 2025. And I'm quite glad I kept hold of them because they're so far up 8% in January. The other one is Novo Nordisk, which is a Danish pharmaceutical company. Whilst I still do back Novo Nordisk to do well in 2025 and beyond, I can't help but be a little bit annoyed that last year they were up 30% in my portfolio and they're currently down around 24% in the red. But I've sent the Novo Nordisk CEO a strongly worded letter to buck their ideas up. So after I sold off all of those individual stocks, I felt like Scrooge McDuck having all that cash sat around. So I knew I needed to get that money working for me again. So I made the following investments. I bought 104 more shares in a defense ETF. 89 more shares in a semiconductor ETF, 74 more shares in a gold ETF, 33 more shares in an S&P 500 ETF, 27 more shares in an all-world tracker fund, and 86 more shares in an ETF that tracks the Indian economy. Essentially, I bought more of the top performing ETFs in my portfolio in 2024. And I know that past performance is no indication of future projections, but I made these investments for a reason, and I've actually made a previous video going into detail about why I think these economies and industries will do well. So if you want a full breakdown of that, go and check it out. And it's safe to say that so far, getting rid of these individual stocks and buying these ETFs has been a fruitful decision for me, as my stocks and shares ISA portfolio is up around 2.5%, so around £3,000 in January alone. This brings my stocks and shares portfolio from around £108,000 to £110,600 for January 2025 without any additional investment. So what does a £110,000 stocks and shares ISA portfolio earn you in dividends? It turns out in January, pretty much fuck all. I got a £44 dividend from my super dividend ETF, but other than that, it was diddly squat. One of the side effects about getting rid of a lot of these individual stocks is that a lot of them paid out quite a good dividend. So I'm anticipating that this year's dividends will probably look a little bit more feeble compared to last year's. My rationale for this is that even though these individual stocks did pay a pretty good dividend, The actual growth of those stocks has been pretty shite over 2024, and indeed the years before that. And secondly, all of the dividends that I receive from these individual stocks, I end up just reinvesting into my ETFs anyway. So I thought, why not just cut out the middleman? That way you mitigate your risk, you still receive a dividend, and you're probably likely to see better returns over the long run. The main test of how successful this strategy is going to be is by comparing my 2024 portfolio performance to 2025's. Not including the money that I invested into my portfolio in 2024, the value of my stocks and shares ISA portfolio went up by 13.7%. So that's the benchmark to beat. So there you go. There's a half decent reason to subscribe and find out what happens at the end of the year. What's the best type of investment you can make to generate passive income? Property, right? Wrong. Wrong. I used to think that rental properties were the best way for generating passive income, but after calculating how much money I made from it in 2024 and forecasting how much I'd make in 2025, I've actually realised it's a pretty shite investment. This financial year, my gross rental income will come in at around £15,000. But after property management costs, expenses and tax, that value comes tumbling down to just over £6,500. And that's without any unexpected maintenance work. Based on the value of the property in 2020 when I bought it, which was £182,500, this means that the annual yield that I'm getting from rental income is around 3.6%. For reference, you can get over 4.5% and none of the risk by putting your money in a savings account. And it's just made me realise that trying to make money from rental properties is nowhere near as easy or profitable as people paint it out to be in this day and age. The real benefit of investing in property comes with the capital appreciation. That's been the real winner for me. And trust me when I say that the growth of house prices is not going to slow down anytime soon. My flat's just been valued at £250,000, which is roughly a 7.5% increase per year since 2020. And that is just one of the reasons as to why I've decided to sell that rental property and buy a property to live in instead. This way I can leverage the money from the property, take out a mortgage to buy an even more expensive house, which will appreciate faster in absolute terms, not relative terms, compared to a less expensive property. The added benefit to this is that when you go to sell that property, you don't have to pay capital gains tax if it's your main residence. Now, I've just skimmed over some of the reasons why I don't think owning property is a good way to generate passive income. But I'll be making a video later this month which goes into more detail on this topic, and we'll also talk about how to properly make money out of property. So click subscribe if you don't want to miss it. Nevertheless, this month I received £1,145 in rental income before tax. Since I've decided that I'm going to sell the flat that I'm currently renting out and use it to help me buy a more expensive property, I've also been building a pile of cash on the side, which I've been stowing away like a little squirrel in the winter. I've currently got around £37,000 in savings, which is split between a 7-day notice account and a cash ISA, which generated me £139.10 this month. About £7,000 of that is in a cash ISA, which I kept there because I was going to use it to pay my tax bill, but I've decided I'm going to move it to my stocks and shares ISA instead, as I think I can make better returns on it there. So to summarise, so far this year I've received £44.05 in dividends, which is all tax-free, £1,144.96 in rental income before tax, and £139.10 in money from interest in savings accounts, which is again before tax. This comes to £1,328.11 in passive income for the first month of the year. If you also add on the £2,740 in capital growth from my stocks and shares ISA, this brings my total passive income for January in 2025 to just over £4,000. That's it for today. If you've liked this video and you want to join me on my journey to FIRE, click subscribe and click like as well, as that helps other people find these videos too. That's it from me. I'll see you in the next one.